Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The euro failed again, right up at that 118 level. We have resistance, 117.94.5. And like we said in the FX Rundown, a failure there and a close back below 117.32 is bearish. The bears are now in the driver's seat, and it's testing first key support at 116.70, 116.90 area. Listen, if this thing gets below there, we're going to be back to the lows, and this does not look like a very good setup. On the flip side of the trade, you have the dollar index, held the 50-day moving average and a trend line. So now it's back almost near the 50% of its recent range since failing last week. What was the catalyst? Well, the ECB left things unchanged. But Mario Draghi in his press conference said it's a little too early to tell what President Trump and the EU could do that's going to ultimately help trade right now. On top of that, he did not firm up the timeline in hiking rates next year. Really, still, there's going to be a lot of speculation that they won't do anything before September of next year. So ultimately what we're looking at is the dollar starting to see a little bit of strength despite data this week that has not been good. Housing data has missed, as well today durable goods fell or came in pretty poorly. Goods trade balance is missed, as well as weekly jobless claims. But tomorrow is a big data point. We had the first look at Q2 GDP, and expectations are at 4.1%. So watch out for this number. It's going to either confirm this momentum in the euro and the dollar, or it's going to deny it. This number is going to be very important as it's the main data point to close out the week. We also have Michigan consumer data. This is going to be the second and final look for the July read. It's going to be important, but again, that GDP number is going to be number one to watch. The yen has also seen a little bit of weakness today. We talked about it in the FX Rundown yesterday and in the technicals. If it failed against that resistance level, we're going to find it back down to about 89.90. It's going to consolidate there heading into the Bank of Japan meeting next week. We expect volatility in the yen, barring any fundamental news or breakouts in the headlines. We're going to see this be very quiet heading into that BOJ meeting next week. Now the commodity currencies, Aussie dollar and Canadian, got hit a little bit. The Aussie got hit more than the Canadian quite a bit. The copper was down about 6 cents from its high. You've seen the metals, other metals, gold, silver retreat. Crude oil did hold pretty well, but the Aussie, with those trade tensions with China now back in the headlines, you saw the Aussie fail to get out and hold above major 3-star resistance. Listen, it looked like it was going to do it yesterday. We got slightly bulled up, considering the fact this was going to be a potential double bottom, and the technicals were leading the way, but we never got that close above 74.5. So right now we're back in the middle part, the bottom half of this range. Major 3-star support in the Aussie dollar, about 73.15 to 73.25. If this gets taken out, look out below. Otherwise, we can be in store for a little more of a consolidation. On the energy side, crude oil held up very well, and that has helped the Canadian dollar fight off the other weakness in commodities, as it is a commodity currency, but also there still is positive traction about a potential NAFTA deal. So watch out for that in the Canadian. The technicals of the Canadian are still fairly favorable despite the failure yesterday to hold those gains. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.